This week we are going to look at the real estate sector, basically in Kenya, and its tax implications. So in case of any queries, you can be reaching out through the chat box, and I'll be answering some of the questions, and also as my co-host will be responding to some of your questions. Okay, so let us begin our webinar today. Basically, it is the implications of tax in the real estate. So real estate is one of the most profitable sectors in Kenya, but also at the same time, it is one of the most audited by the KRA. So in our webinar today, we are going to look at why KRA focuses on the real estate, the tax compliance in the real estate, the electronic invoicing management system as far as the real estate sector is concerned. Also the tax audits in the real estate. We shall look at tax disputes and resolutions, and also emerging issues in the real estate taxes, and we shall look at some examples and make a summary. So one take-home point that I would like us to put in our minds from the beginning to the end is when it comes to real estate, most of the time it's not really about law. It's not really about evasion. It is mostly about the structure, documentation, and timing. If you are in the real estate sector and you miss the three, you will find yourself in problems with the KRA. So in the real estate sector, mostly the tax exposure, it does not really arise from evasion. It arises mostly from poor structuring, misclassification of the income, weak documentation as far as your support documents are concerned, non-compliance with ETIMS. In our prior webinars, we have been talking about ETIMS validation and ETIMS documentation. So the same issue also affects the real estate. If you do not keep your documentation well, you'll find yourself that you will be in problems with KRA. And most of the time you'll find it's not intentional. And as we all know, ignorance is no defense. So you have to be really careful about how you handle your matters as far as taxes are concerned in the real estate. So the reason as to why KRA usually focuses mostly on real estate is because mostly the real estate has a lot of high cash transactions. From the purchases of goods to the payment of labor, you'll find that most of the transactions in the real estate are usually in cash basis. So this is usually a very fertile ground for KRA to look for. Also, there's a lot of undervaluation of property as far as CGT is concerned. And most of the time, also you'll find that a lot of people are mixing personal and business property. Case example, as much as we are going to look at it later, you are a developer. You develop 10 units, and then you decide that you're going to, in one of the units you're going to live, you're going to use it for your personal use, or you're going to stay there with your family. You may think that there are no tax implications as far as that is concerned, but you have to be very careful. As we go on, we will find out how we should separate our personal and business properties to avoid issues with the KRA. Also, there's a lot of VAT misunderstanding, like who is supposed to pay taxes, how are they supposed to be withheld, at which point are you supposed to pay your VAT as far as the contractuals are concerned. Also, the ETIMS exposure, the people that you're dealing with, how conversant are they, or how how conversant are they with e-teams? That is number one. Number two, some of the times you might be dealing with a VAT input. At the same time, you're given an e-team but does not have a VAT. If the person is not registered for VAT and you're dealing with vertible goods, you'll find that as much as you have an e-teams invoice, the inputs are going to be disallowed. So we have to be really, really careful about when we're handling e-teams issues and how compliant our other people are. So if we see this statement, real estate really leaves a paper trail. KRA simply connects the dots. The paper trail that I'm talking about is there is a lot of information KRA can access even without asking for the documentation from you, because they can access the land registry data. You have gone and purchased land. That data is found in the land registry. So KRA also already knows the amount of land that you have bought. Also, there is stamp duty records as far as land transfers are concerned. So using the amount of stamp duty you have paid, which is compulsory, they can be able to work backwards and see the value of the land that you have bought. Also, we have the e-teams and the VAT returns, both the ones we file and the people that you're dealing with, both your customers and your suppliers are declaring. Also, we have the bank deposits when they ask for your bank statements, and also the rent declarations as far as the MRI is concerned. So when we come to the real estate, these are some of the taxes that affect the different sectors in the real estate. Number one, we have the income tax. We will explain that later on which ones are affected by the income tax. Number two, we have the VAT Act. Number three, we've got the stamp duty. We have capital gains. We have withholding. And also we have the requirement as far as it is concerned. In the recent past, we have seen that if you are a VAT registered person and you are not fully compliant with the e-teams requirements, there is this every business person's nightmare called the special table. So apart from not being compliant with VAT, also the e-teams in the recent past affects your ability to file your VAT. And at the end of the day, you'll find that you have been put into the special table. So we have to be very careful. We have to be really careful on how we are dealing with our records, and also as far as the requirements of KRA are concerned. So number one, what we're going to look at, we're going to look at some of the components as far as the real estate is concerned, and the different taxes that affect the different businesses. Number one, we have developers. So who are developers? So developers, these are people who find land and they actually build the land. They build houses and units, and some of the times you'll find they sell them, and some of the times you'll find that they rent them out. So number one, for developers, if you are in the business of developing houses and selling the houses, that is a trading activity. So you are liable for income tax. Also, if you are renting out for commercial purposes as a developer, you should register for VAT and actually pay the same. What if you are leasing out or renting out to residentials? Of course, that is exempt from VAT, but at the same time, you have to pay MRI. You have to pay MRI. MRI usually affects landlords whose monthly rental income ranges between 288,000 to I don't know if I'm visible. So so that is MRI. MRI usually is usually paid on residentials, and the residentials are usually VAT exempt. But as far as they are VAT exempt, if you're either dealing with income tax, if you're dealing with VAT, if you're dealing with commercial or you're dealing with residential, ETIMS is mandatory. You have to be very careful about that. So, one thing to note, residential rent is MRI. Commercial rent has VAT. And most of the time you'll find there are some times where, as far as commercial rent is concerned, some of your tenants or some of your clients will be appointed as withholding agents. So there's also withholding tax risk, whereby if you underdeclare and your tenant has declared the whole amount, it will bring issues with KRA. So we have to be very careful to know that commercial rent both affects both VAT and withholding exposure. At the same time, at the end of the year, you have to file income tax for the same. So another one, we have investors flipping land. Who are these people? These are people who buy land, they hold land for some time, or they buy land and they sell land. That is their principal business. So for such kind of people, the tax that affects them is CGT at 15%. The gains on the sale of that land. So we have developers, some of the developers who they buy land and they subdivide the land and they develop the lands. Some of them will find that they pay CGT instead of income tax. That is you're paying, yes, tax to KRA, but you're paying the wrong type of tax. So we have to be very careful about the kind of tax, or rather the nature of the transaction, because mostly the nature of the transaction affects the kind of tax that you're supposed to pay. So my question right now is, in the three categories, where do you fall? Are you a developer? Are you a landlord who is basically renting property? Or are you an investor who is involved in flipping land, whereby you buy land and then you sell? So do you know the kind of tax that you're supposed to pay? So we have to be very careful on the kind of taxes that you pay, because the kind of business that you do affects the kind of tax that you pay. As far as construction projects are concerned, we have to be very careful as far as ETIPs are concerned, because construction projects, if you're a contractor, let me mention that if you're a contractor, you can fall into the risk of having issues with KRA so easily, because number one, especially if you're dealing with any government institution, you'll find that any payment made to you will have a withholding. So picture this: you are a contractor and you have gotten into contract with, let's say, probably the county government, and then you're paid money, but you're not paid the whole amount. All government agencies are withholding tax agents. So you'll find that they will withhold both VAT at 2%. They will also withhold income tax at 3%. So basically what the certificate says is, from the 2%, KRA can work backwards to know the kind of sale that you made, or rather the gross value of your contract. So probably, especially while working with government institutions, you'll find that they never pay immediately. So you have done your work, you have given the certificates, and you are paid. All this while, you are not so careful about filing your VAT. So sometimes you're not even registered for VAT, but you are withheld 2%. So you have to be very careful, because in this situation, KRA will force register you into VAT. Then number two, they will ask for 16% of your invoice, which affects the VAT, putting in mind that you never had any receipts for the work that you did. So you'll find yourself, you'll pay 16%. At the same time, you have to pay the income tax of 30%. So the point that I'm trying to drive home is, number one, even before as we go on, you will find out what we are really saying. But any ETIM, any invoice that is not ETIM compliance, it is usually disallowed. Let us look at a practical example. Let's say you're a developer and you find a contractor. You pay the contractor 30 million to help you construct your units. So if the contractor does not give you an ETIMS invoice, all this 30 million, as far as VAT is concerned, you cannot use it, as it is usually disallowed. So you'll find that there are some situations whereby you're a developer and you have probably your friend who is a contractor, and then unampatia kazi ya kufanyia kazi. So you just atakupatia quotation yake, then umlipe, and then he or she does the work. At the end of the day, you're going to be in very big trouble, because KRA will require for you to explain the 30 million. And because you are VAT registered, if you have not declared the 30 million, it will be under undeclared sales. Number two, if you declare the 30 million, but now the issue is the 30 million does not have ETIMS invoices, so you cannot claim it as one of your inputs. So you'll find yourself paying a lot of VAT, and at the same time, basically the truth is you incur that expenditure as far as construction is concerned. But you never had the documentation to support that. You remember the first statement that we said, that mostly it's not about evasion, it's about documentation, timing, and classification. So that is a classical example of how non-documentation can bring you problems with KRA, even when you never intended to be involved in tax evasion. So let us look at before we look at what KRA asks for, let me reiterate on what I have said. Suppliers where there is no items, VAT input is lost. Basically, for those who might not understand what VAT input is, when you're registered for VAT, what usually happens is you have to declare your sales. That is called output. Number two, it is usually compared to the amount you invested into it. Those are basically purchases called the VAT inputs. So how KRA works is they will take the input, basically not the gross but the net, and then they deduct the input. You take the output, you deduct the input, and then the value that is the balance, you will pay 16% of the value. So imagine a scenario whereby you have an output of, let's say, the 30 million, but you have an input. Yeah, you incur the input, but they're not items compliant. So all of them, they are disallowed. So that is zero. So at the end of the day, you'll find that you pay a 16% of your of your growth of all your sales without factoring in inputs. So we have to be very careful as far as inputs are concerned and as far as items compliant inputs are concerned. So what I'll advise contractors and developers, as far as your tendering is concerned, as far as your transaction is concerned, please you can insert an items compliance clause in your contracts, whereby you tell your suppliers that you're only going to deal with them if they are items compliant. Because at the end of the day, you're the one who is going to bear the cost. Probably you'll find those people without items, they will sell materials to you at a relatively lower price. But at the end of the day, you're going to pay the taxes, both for them and for you, because there will be nothing to claim from. It basically reiterates the fact that sometimes cheap is expensive. But if the price difference can factor in both VAT and income tax, then you're good to go. You can be psychologically ready to know that as much as I bought it at a lower price where there are no items, the difference that I have made is enough. The difference that I have made is enough to cushion me from both VAT and income tax. So let us be very careful. Also, number two, another advice that I'll give, especially to contractors, you can try and have your monthly reconciliations with your bills of quantity while you're doing a project. Because in the current page, one of the items that KRA asks for as far as developers and contractors are concerned, they'll ask for your BOQs, your bills of quantities. So if there is a variation, if your items are not item supported, then you're going to be in problems with KRA. So let's say, for example, KRA calls you and wanakwambia, we are going to do a tax audit on you. So one of the things that KRA will ask you is the sales agreement for the lands. Number two, they'll ask for the approved plans, probably from NEMA and the county government. They'll ask for your bills of quantity, your bank statement, your ledgers, which they can easily access, and also the land history search. So in all this list, in the whole of this list, if there was a land transaction, utapata, you will find that you paid the stamp duty, so KRA can easily access that. In your items ledger, they have access to your items ledger. So we have to be very careful as much as KRA is concerned. If I can mention something on the bills of quantity, if you cannot tie every shilling to your bills of quantity items, you will lose the audit. Because when it comes to audits, when it comes to KRA audits and the real estate sector is concerned, the person with the better documentation wins the case. Because what KRA basically will do, they will poke holes, and it is your responsibility to defend every accusation. So with better documentation, you can win the case. So you have to be very careful to ensure that in your bills of quantity, that is why I said you are supposed to tie every shilling to an item in your bills of quantity. That is why I said you're supposed to do like a monthly reconciliation of your bills of quantity in comparison to your items. So if you're not careful with no proper documentation, you will most likely lose the audit. Not because you evaded, but because you just didn't have the documentation that was required. So we have to be very careful as far as these audits are concerned. And also, when there are tax audits and tax disputes, so what usually happens after you have been given an audit or a review, their findings will be given an assessment. You'll be given an assessment. At the end of the day, if you do not agree with the assessment, you are allowed to object. So one of the things that you're supposed to put into a lot of consideration while even doing your objections, you're supposed to put in mind the objection timelines. The objection timelines as prescribed by law. So we have to be really careful as far as the TP is concerned. I think it's in section 51, which requires us to file within 30 days after the assessment. But you have to know, even after you go for the objection, one very important thing you have to remember is the burden of proof sits on the taxpayer. If you know that the reason as to why you are given an additional assessment was because you never had the proper documentation, even when you go to the objection stage, still if you've got no documentation, the assessments are going to be confirmed. So you have to be very careful, the documentation. And moving forward from late last year, documentation is not just documentation if it is not an ETIP documentation as far as your expenditures and your expenses are concerned. In our prior webinars, we talked about the exemptions, the circumstances where you are not really required to have an ETIPS invoice. I hope you still remember things like salaries and wages, airline ticketing, expenses that have been withheld. So those are just some of the exemptions to ETIPS. But you as a person, you're supposed to, for you to survive, because as much as there's a lot of cash transaction, as much as there's a lot of money in the real estate sector, the profit margins are not so out of this world. So imagine carry taxing on your little profit that you've made with the additional of interest and penalties. You will find out that hakuna biashara unafanya. So we have to be very careful. I'll say this and I'll say this again. In real estate disputes, whoever has the better paperwork wins. So if you are the kind of person who usually braves themselves that they can't involve other people, they can't pay someone to help you do your documentation, you'd rather look for an account clerk who will ensure that all documentation are there, instead of you seeing it as a cost, and at the end of the day you will end up paying a lot of money. Also, with proper documentation, it will give you a peace of mind, because even if KRA comes, I can be able to defend my expenditure. Yeah, we talked about bank credits, where KRA, when you give them your statement, any unsupported amount actually is treated as undeclared sales, which is liable to both VAT and, if you are registered for VAT, and income tax. Also, on the debit side of your bank statements, money out, especially by directors, if you cannot be able to tie every withdrawal to an expenditure with a proof of payment and it in receipt, every withdrawal from the director that is not explained is usually treated as director's drawings, and it will be charged 30%. So in your own free time, go through your bank statements, and if you're a director, and see how much money that you withdrew. That's number one. Number two, how much money, how much supporting document you have for the same. The balance that you're going to get, multiplied by 30%. That is the amount of tax exposure that you are in as far as KRA audits are concerned. Number two, take your bank statement, look at your credit side. all the monies that came in. Of course, you have, if you have got different accounts, if you have got bank transfers, if you received some loans, of course, they are adjusted. So after that is said and done, and also if there are people who owed you money and paid you in this accounting period, after all that is said and done, the money that you get, those are the expected sales. So what KRA will do, they will take that expected sale, and then they're going to deduct what you actually declared in your returns. So all the variance, if you're VAT registered, all the variance, unless you're dealing with exempt sales, the variance that remains will be charged both VAT and income tax. So my point that I'm trying to drive today is, without proper documentation, you are probably going to be exposed to a lot of taxes that could have been easily available if you ensure that all the transactions that you're dealing with, they are ETIMS compliant, and you can claim them under your VAT. I hope I'm making sense. There are those, especially in the construction industry, some of the materials you're getting, you are 100% sure that you cannot get ETIMS receipts for them. Let's say mchangarawi. So one thing you have to factor in while you are giving out that tender, or while you're doing costing, you have to ensure that your profit accommodates the VAT. In the sense that whether you like it, whether you sourced it from people who are vatable, who gave you VAT receipts or not, you have to pay for it. So you have to factor in that as you give out your costs of developing that unit. I hope I am making some sense. Yeah, I hope I am making sense, and I hope I am helping someone. For those of you who are raising your questions, I can see some of your questions are being answered. I can see your questions are being sorted. Probably I'll touch on the emerging issues in the real estate. We have had a very sharp rise on Airbnbs, and we have encountered people who own Airbnbs, and yes, they pay taxes, but they pay MRI because they're like, oh, no, these are residential people living, so we're supposed to pay MRI, which is wrong. Airbnbs are treated as commercial properties. That means if you have reached the threshold of the 5 million, you're supposed to pay VAT and income tax, not MRI. The person who pays the MRI is, because some of the times you'll find that you go to a landlord and then you acquire a few units. So you are the tenant. in a residential place, but you use it for commercial purposes. So the owner is the one who's going to pay MRI in the residential units that you are letting. But you as a person who deals with Airbnbs is supposed to pay VAT and income tax, not MRI. I hope that is clear. Number two, we have landlords, especially when it comes to student hostels. As far as student hostels are concerned, the law exempts educational institutions who offer hostel services to their students from VAT. That is only limited to educational institutions. But you as a person, let's say you have 2 floors, and all the floors you have either singles or bed sitters, but at the same time, you do not list them per house, you list them per bed, whereby you'll find in one room there are people sharing. Let's say there are 2 people, in others there are 3 people, in others there are 4 people. As much as you are a landlord, as much as you are dealing with residential, but that is commercial property, you're supposed to pay VAT if your sales exceed 5 million, to pay income tax. I hope I'm making sense. So if you've got any questions, you can continue asking. I can see people are asking their questions. Number 2, we have joint ventures. These are joint ventures between landowners and developers. I'd like us to look at this case scenario. You are a landowner, right? And let's say you have 1 acre of land at a very prime place. So you are thinking about developing houses for sale or houses for rent, but you do not have money. So you approach a developer. You approach a developer, and then you guys agree. I'll give you the land. You're going to build, let's say, 20 units. Just a case example. You're going to build 20 units. Now, instead of me paying for the 20 units because I do not have the money, or even if I said I find tenants and then I pay you back your money, it will take a long period of time. So from the 20 units, we are going to share. 10 units will belong to me, 10 units will belong to the developer. This looks like a very good deal. So you do this, your houses are built, and then you start renting out, and then you start getting your rent, and you start complying. You start complying. One day KRA comes to you and literally accuses you of tax evasion. Then you wonder how this came about. But one thing you don't realize, there are some taxes that you were never accounted for. Number 1, when you are when you're making up this deal, you had 1 acre, right, to build 20 units. The developer did not have the land. So basically what it means, from the 1 acre, you transferred half an acre to the developer, right? But was stamp duty paid on the land that was transferred? As much as it was barter trade rather than exchange, but there was no stamp duty paid. So are you guilty of tax evasion? Of course. You never paid it. Number two, the developer developed 20 units, right? But at the end of the day, he only remained 10 units. Hope I'm making sense. He built 20 and then he remained with 10. So basically what it means, he sold 10 units to you. Yes, it was barter trade. But this was a transaction. This was a sale. Was income tax accounted for the 10 units that were transferred to you? No, it was not. So when it comes to joint ventures, you'll find that in these two situations, neither the landowner nor the developer really had any intention of evading tax. But at the end of the day, they are both guilty of trying to evade tax, or guilty, they are still liable to pay those taxes. You remember our opening statement was, when it comes to real estate, most of the time it's not even about evasion. It's about documentation, it's about classification. So we have to be very careful. We have to be very careful as when we are dealing in the real estate. We have to be very careful about considering the structure, the documentation, and also the timing. Yeah, I can see we are moving on pretty well. You can see we are moving on pretty well. When we see questions, it basically means that people are being engaged in this conversation. We can see most of your questions are currently being answered. And when it comes to e-teams, most of the we've had three webinars on e-teams, and we tried explaining the implications of e-teams and also buyer-initiated e-teams. So for those of you who still have good questions on that, we'll try and answer them for you. So there is someone who is called Benson, has asked us to clarify So if you do monthly MRI, will you declare the same from your annual income? No, you don't have to declare it because MRI is final tax. So you don't have to declare it at the end of the year, at the end of the year in your annuals, because basically KRA has the data. But also you have to know that KRA nowadays they usually go around. Number one, they go around posing as tenants looking for houses. So they'll go to a unit and then they ask the rent, and then they ask for the owner, and then they go and cross-check. So basically when they call you, they already know the number of units that you have and the rent that you charge. So they compare it with the MRI that you filed on a monthly basis. Number two, KRA can access your meter numbers from Kenya Power. So basically, the number of meters that you have will give an approximate of the number of units that you own. So you have to account for those, because there's a time where every person with multiple meters was automatically put into MRI. So you had to go and explain yourself, come you do not have the housing units. You had to explain why you have several meters. And then let me see. Let me see any other question that has not been answered. So there is Fred who is asking that the landlord is paying MRI, isn't registered for VAT. I'm letting for Airbnbs. I required to pay VAT. How do I claim input? You won't be able to claim the input from the landlord. The rent that you pay will help you reduce your annual income tax. But as far as Airbnb, because basically Airbnbs are services. But if you bought equipment for repairs for Airbnbs, those are some of the allowable Airbnbs. But you cannot claim your rent receipt, even if it is generated. It will only help you reduce your income obligation at the end of the year, but not from landlord, because MRI, they are not, residentials are exempt from VAT. There's also another person asking for directions on reverse invoicing. Probably we'll look for another session again to remind you on the procedure of doing reverse invoicing. So there's another person asking, when it comes to MRI, this is Bilha, please clarify the amount to be declared. The amount to be declared is the gross. The amount to be declared is the gross. No deductions are allowed as far as that is concerned. No deductions are allowed. There are those who include electricity and water in your rents. So you declare the gross. The only issue is when it comes to deposit refunds. KRA was holding on the fact that the law says that it's gross, but currently from the High Court, it was ruled out that deposits are allowable. So I don't know how soon that will be considered by KRA, but all other expenses, any expense that has been cut, be it repairs, be it electricity, be it water, be it security. When it comes to MRI works the same way as TOT works, just the gross, and it is final tax. So more of your questions will be answered. And then we have got SACCO funded housing projects. We will do a webinar on SACCOs and other special entities. We shall look into detail because basically the SACCO incomes are usually divided into, there are those that are exempt, there are those, when it comes to members, most of the incomes they are exempt. When it comes to non-members, it is usually done at the income is usually taxed at 50%, but we shall have a comprehensive webinar on SACCOs and other special entities. The schedules will be given to you in due courses. We have mixed-use development. Mixed-use development is whereby you find someone has flats, and then on the ground floor it is commercial, then junior residentials. So you have to separate the commercial ones. Hizi duka yenye ziko chini, you have to register for VAT and pay the same, and also you have to register for income tax. So you have to declare the same in your income tax returns. Then the residentials on the upper floors, those are under MRI. Those are under MRI. So I'd like us to look at some of the scenarios and some examples. In my explanation, I think these questions will go to you. So I have got land at 20 million, developed and sold it for 120 million. Is it liable for CGT or tax? In my long explanations, what do you think? So I'll be looking at the answers in the comments. And then number 2, I have residential apartments rented out at 1.2 per month. Does that attract MRI or VAT? Because VAT, we have said the limit is 5 million. MRI imesema it is residential apartments. So what do you think? What do you think about the 1.2 million per month? Will I pay MRI or will I pay VAT and income tax at the end of the year? The last question. So the developer builds personal house and include costs in the project. You remember I told you developer may develop 10 houses and then akaamua one of the houses ile yenye iko kwa either kwa kona kabisa ama kwa gate, hiyo ni yangu, I live in it. So what do you think about that? How how will it be accounted for? Because let's say the whole project costs 30 million, right? The whole project costs 30 million. Now, from the 30 million, I have developed 10 units, probably at 3 million each. From the 10 units, I have decided that I'll live in one of the units. So when it comes to costs, both for VAT, while I'm claiming for my monthly, and when it comes to income tax, at the end of the year, what do you think I should do? So as we move on, I will look at the answer that you've given me, and then we will come back and answer these questions. We'll come back and answer these questions, especially for example 2 and 3. I will give my input on them. So please tell us your thoughts as far as what we have talked about is concerned. So as we almost come to an end, I'd like us to look at 10 mistakes in the real estate, which basically gives you a very bad tax exposure to KRA. Number 1, paying CGT instead of income tax. You remember when we began, I highlighted on the instances on how you'll end up paying CGT instead of income tax. I hope you do remember. So the structuring is very important. Knowing the kind of tax that you're supposed to pay and the sector that you are in is very important. Yeah, so you remember when you talked about the land flipping and the development and the developers. So that affects both CGT and income tax. Also number 2, ignoring items, kufanya vitu kienyeji. Number 1, you have casuals. This aside, if you have casuals and you don't have a wage schedule, chungana sana. Number 2, if you are in the business of so much minimizing your costs so that you remain with a lot of profit, and you go and acquire your items from people who are not items compliant, at the end of the day, you are going to find yourself in a lot of problems. So you have to be very careful to ensure that each and every receipt that you have is not only a receipt, but it's also a receipt that is items compliant. And if you're dealing with vertible items, ensure that the receipts that you're getting have both VAT. And nowadays it's very easy to verify if the receipts you're being given are legitimate, because we can't really overlook documentation is Natoka River Road. You can't really overlook that. So you might be given a receipt and it looks like a very legitimate receipt. Only when you go to claim it, it is rejected. So what you can easily do, after you bought items, umepatiwa the items receipt, there is a scan code nowadays on every receipt. Scan that code, go to the KRA website. It will give you information, all the information about that purchase that you've made. Failure to do that means that when you go to claim that items invoice, it is going to be rejected. Because nowadays there are people who, there are even circumstances whereby people have their items blocked, but they can still produce invoices, especially the e-clients, those apps on the that are installed on the laptops. Yeah, especially those that are installed on the laptops, they will still produce invoices, but the same invoices are not transmitted. The same invoices are not transmitted to KRA. So they might look like very legitimate items, but you cannot claim them. Number three, not charging VAT on commercial rent. If you've got shops, one of the things that you have to do, even when you're starting off, even before you reach the threshold of 5 million, you have to put it very categorical in your agreement with the tenants, that the amounts that you have charged them, they are not inclusive of VAT, which is subject to change. That is, when you reach the threshold that is supposed to pay VAT, you have to adjust your rent to accommodate VAT. So in the pricing of your commercial properties, in the pricing of your shops, in the pricing of your rooms for commercial purposes, always ensure that you charge VAT or you give an allowance as far as VAT is concerned. Because failure to do that, the rent that you are receiving will be charged VAT, and you'll end up, especially, most of these properties they are funded by banks. So utapata you have land, you approach a bank, wanakupatia loan. So basically, most of the money goes back to paying rent, to paying the loans. So if you have not factored in VAT, at the end of the day, you will basically be remaining with nothing. If you take the rent, then you deduct the loan that you've been given and your monthly expenditures, and then now with 16% your VAT, you remain with nothing. So ensure that you charge VAT on commercial rent, because you're supposed to pay the same to KRA. Also, avoid mixing personal and project costs. Avoid mixing personal and project costs, in the sense that if you're doing a project, do it to totality. But if you're doing it at the same time as your personal project, ensure that they are documented separately. Number 3, missing withholding tax on contractors. We all know, by law, you're supposed to withhold. So you are a developer, umetafuta contractor, umempatia kazi na ukamlipa pesa yake yote. You never withheld. By law, you're supposed to withhold. If you do not withhold the amount, you'll have issues with KRA, because KRA will ask you, no, by law, you're supposed to withhold any amounts. You're supposed to withhold the 3%, but you never withheld. So before, KRA used to require you to pay the whole amount of 3%. But with the Finance Act 2025, you are only supposed to pay 10% of the 3%. But that is if your contractor declared the whole amount. If he or she never declared the wholesale, you're going to pay 3%. But then again, it is usually quite subjective, in the sense that when you go to these cases, KRA will still insist the burden of proof is on the taxpayer. So now going to your contractor and asking them for their returns is usually very tedious. So there you will find in some circumstances, if you do not defend yourself well, they'll still ask for the whole 3% value of the project. And then, of course, they are going to add interest and penalties. But if it can be proven that the contractor declared the wholesale on the other side, then you're only going to pay a penalty of 10%. Another issue, another mistake that we have talked, and I would like to reiterate, the joint venture arrangements without tax planning. You remember what we said about joint ventures, about landowners and developers, right? About the stamp duty and the income tax. So we have to be very careful of that. Also, another mistake is undervaluing property transfers. It might look like a tax planning procedure, or rather one of the ways that you can use to tax plan, but it is one mistake that most developers fall into. The other times, you remember I mentioned about the bills of quantities. Remember I mentioned about the bills of quantities. So we say that you're supposed to attach every shilling to an item in your bills of quantity. Failure to do that. So we have no project cost trail. You cannot trail your project cost. So at the end of the day, you are unable to prove that you actually incurred that expense. So basically, if they disallow your costs, then they charge you both VAT and income tax. Basically, itakuwa unafanyia serikali kazi, because it will be very high and it will cost you a lot. And then you've got poor documentation. Poor documentation. We have talked about documentation. As I started these 10 mistakes, you remember I mentioned about wages, salaries. You are a contractor na uko na watu wa mjengo, unawalipa kienyeji. There is no documentation that can trace the labor that has been involved from day one to the last day. At the end of the day, while you're doing your income tax, if there is no documentation, then that will be disallowed. And where we are headed as far as ATM's validation is concerned and attachment of documents, where we are headed is even in the salaries can be accounted for in the pay. But for the wages, where we are headed, we will find out that KRA will probably start asking us to upload the wage sheets to support the amount of wages that you have claimed in your income tax. So the earlier you comply, the earlier you fall in line. The earlier you fall in line, the better it will be for your business. And then we have late objections. Yeah, and then we have late objections. After you've been assessed, you're supposed to file the objection within the 30 days, stating your grounds of objection and the supporting documents. So if you do not object on time, there's a high possibility that objection, it might be on good grounds, but it might be rejected because there are only three circumstances. There are only three circumstances where a late objection can be allowed. Number one, we have if you are not in the country, so you are unable to file it. Number two, if you are sick in hospital, you can prove that you are admitted in hospital, so you are not able to do that. And basically, number three is usually kind of subjective because it is on other reasonable grounds. So it depends on how much you can convince the commissioner to allow your late objection. So let us ensure that in these gaps that have been mentioned, in these mistakes, we try and work on them. We really try and work on them. We really tried and work on them to avoid issues with the taxman. So we have, if I can go back to the questions and answer one or two questions. So we have, someone is asking, VAT for commercial purposes is paid when? Can one just pay income tax on it? No, VAT is usually paid on a monthly basis. It is paid on every month by the 20th of the following month. So basically today is the 20th. So if you have commercial properties that are registered for VAT, the last day of filing and paying is today. Failure to which, if you pay later than today, you will accrue a penalty of 10,000 shillings or 10% of the taxes that are paid, whichever is higher. So you're supposed to register for VAT if you have not yet registered. And if you have any issues as far as that is concerned, you can probably reach out for us and we might help. So someone is asking, or that has been answered. Yeah, someone was asking if landlords with MRI issue ETIMS invoice. Yeah, they're supposed to issue ETIMS invoices. Someone is asking, how do you account for ongoing projects before sales commence? Basically, if I can comment on this, we have tax points. as far as these projects are concerned. Number one, I'd like us to look at different scenarios. You're given a project and you are given a deposit for the same project. So money imeingia kwa account yako. That is number one. Number two, you are issuing certificates. Probably unaenda unatengeneza foundation, then you issue a certificate, then unapatia due maybe to the first floor, then issue another certificate. I think those people in the construction sector, they are quite conversant with this. So number one, you are paid a deposit. Number two, ulipatiwa certificate. Unapatiana certificate. So between the then number three, the person that you're dealing with withholds. So there's a withholding certificate too. So among the three, as far as VAT is concerned, let me clarify, it is the earlier of. Whichever of these comes first, that is your tax point. And also for those of you who are acquiring expenses probably before the sale, provided it's a valid items invoice. So let's say you have been doing it and then now you register for VAT and you have to pay and you have invoices prior to that. So for those, by law, the law allows you to claim those invoices that were pre. It goes up to 24 months. Of course, the commissioner will ask to verify those expenses, but by law, you can, before commencement, for those expenses, they can go up to 24 months. But you have to prove that those are expenses that are related to what you're doing, but were acquired before, either before you are registered for VAT. But if you're registered for VAT, what usually happens is those expenses, you're going to file them on a monthly basis. You're going to accumulate credits so that when you are to declare that VAT, you have inputs to offset against your output. I hope I'm clear. If you already have an ongoing project and then you are incurring expenses. Let's say you are still, because they're talking about real estate, you are a contractor and umeanza project but you've not been paid anything, but so you're using your money, so you are incurring expenses. So from the very first day of the contract, on a monthly basis, you're supposed to declare those inputs in your VAT account. So you'll find that for several months, you will have accumulating credits. But in the recent past, KRA has been raising a flag on those. But what they usually do is they ask you to go and explain your credits. So for those in the construction industry, it is usually understandable because you accumulate the credits as you are doing your work. So they might call you. There's no need for alarm. They might call you. When they do call you, please go and explain. Because failure to do that, they will put into the special table. So accumulate those expenses, and then when any of these three circumstances that I've talked about arises, you can use them to offset the output sales. Let me look for, I hope that has been answered. Let me see. Yeah, there's someone who is asking that I clarify on garbage and electricity. Garbage and electricity, they are not allowed. Garbage, electricity, and water charged in the rent, they are not allowed. As you cannot deduct them for MRI. Yeah, so there's someone who is asking for a recording. Yeah, so we'll have a link. Yeah, you can get the recording. I'll give you a link where you can register and you'll get the recording for these sessions if there is any part that you have missed. Yeah, so I am getting some answers over the same. Yeah, we are getting some answers on the scenario that I've asked. Yeah, so basically from some of the answers, I can see that you guys were listening. I can see I was not talking to myself. Yeah, some of you are answering. Yeah, so most of your answers are correct. Most of them are correct. Probably if I can touch on probably number 2, number 3. Number 2, residential, that will be MRI. Yeah, that will be MRI. There is someone who had asked I clarify on the band of MRI. MRI is between 288,000 to 15 million. 288,000 to 15 million. So if your rent falls between 288 and 15 million, you're supposed to pay per annum, not per month, per annum. You're supposed to be MRI. Below that and above 15 million, you go for income tax. Go for income tax. Then we have number 3. Number 3, basically, you have to apportion. Even when you're claiming your VAT inputs, you have to apportion. Even the costs that affect both houses, you have to apportion depending on the value of the land. So the answer number 3 is apportionment, both for VAT and income tax. I hope I can see I was not really talking to myself. So as we are coming towards the end, I'd like us to note this: real estate is profitable, but only when tax is structured correctly. So as you put in so much consideration in looking for those tenders and looking for those properties and start being a landlord, the strength that you use in investing should be the same strength that you use in matters tax. It is high time, especially in the real estate sector, we stop considering tax as an expenditure, but rather as a way of planning and an investment. Because you might build for so long and drains your energy and your resources only for KRA to knock at your doorsteps and everything crumbles. Because imagine KRA going through your records for the last 5 years in your bank statement, and anything that cannot be explained is taxed. So let us be very intentional as far as taxes are concerned. Probably as I finish, I'd like to leave you with this, that the difference between a successful developer and a developer in dispute with KRA is not profit. It is documentation and structure. I hope it makes sense, and I hope you put it into consideration. Probably you having a lot of unanswered queries. Number one, there are some things that I'd like us to highlight. Number one, we have a CEO's breakfast meeting. It will be at the United Kenya Club. The charges will be 3,000 shillings. It will be on the 19th of March. So put that into your calendar. We'll have our CEO speaking on matters tax, on how you can navigate eatings, which is basically the new tax reality, whether we like it or not. Number two, we have another able speaker, Alfred Ongere, who is an AI expert. So, and how we can use AI to develop business success. It is inevitable for us to start using AI. So let us come to that meeting and we'll interact and we will find a solution to most of the problems that we are encountering in our businesses. Number two, we have a tax masterclass. So probably you have been in this webinar or in our other webinars, but you still have a lot of questions to ask. So we had you in mind as we thought about this. So we have, number one, a physical training and an online training. Basically, we shall have a run through from A to Z of taxes. We have a physical training that will run from the 4th of March to the 6th of March, 2026. It will be running from 8 a.m. to 5 p.m. at the Swiss Lenana Hotel. The charges will be 50,000 per person. The advantage is you can come with your whole list of questions. We shall have a very able team who will be there to help you, who will sit down one-on-one with you and consult with you on every tax matters. That is, if at the end of the day, if at the end of the training you're still not conversant, it will be more of a working relationship whereby we will help with all your tax queries and your tax planning matters. We have our online training, which will run from the 9th to the 20th of March 2026. This is basically on a daily basis from 7 p.m. to 9 p.m. It will be online on Microsoft Teams Live. The charges will be 25,000. And at the end of the day, you're going to receive certificates because it's a recognized training. You're going to receive a certificate on taxation. And there is a link there and a QR code for registration and also to access the manual, the training manual for the said training. You can look at it. Please register and let us start a conversation. So if you are in this webinar and you have any tax issues, we offer tax services like all tax returns, all returns for taxes. We do health checks to tell you the kind of exposure you have as far as KRA is concerned, the risk that you're running when basically the health of your business as far as KRA is concerned. We have, if you are dealing with exports, we'll help you process your tax refunds and also advise you on tax planning. Also, we can represent you at KRA on different issues, be it reviews, be it audits, and also we do advisory as far as mergers are concerned, as far as transfer pricing documentations are concerned. We also offer tax training like the master classes and the webinars. We also offer audit services. We are very thorough in our audit services. We will do your audits and help you sleep with a lot of peace as far as your audited books are concerned. Lastly, something that I'd like to touch on, we also have a system called My Accurate Books. We have talked a lot about documentation and keeping of records. And while dealing with clients, we noticed there's a very big gap as far as systems are concerned, as far as proper documentation is concerned. So we have a group of experts who came up with a system, an accounting system called My Accurate Books, which helps you keep records for your businesses. Also, it gives you basically an understanding of your own business, whether you're running a profit or a loss, and also it prepares you for audits, and also as far as KRA audits are concerned and reviews. So please spare us the next 10 minutes as I want to hand you over to a software expert who will basically run you through the system and also give you a better understanding of this amazing system called My Accurate Books. As we hand over, please remember the masterclass, both online and physical. Please come on board. Let us come, we interact, we share, and we advise. As I said, tax planning is not about an expense, but rather an investment to your business that will help you save more. All that is said and done. For those of you who missed the first part, my name is Timothy Muya, and it was a pleasure holding this webinar with you. Over to you, the software team.
Thank you very much, Timothy, for such an informative. Thank you very much, Timothy, for such an informative training, especially to business people who are in the sector of real estate. So my name is John Gashoka, and in the next 10 minutes, in fact, call it 7 minutes, I will run you through the system that Timothy has just talked about. This is in relation to bookkeeping and accounting. We're going to have a conversation. I'll run you, it will be brief, so that you have a gist of what the system is, what it does, and how it can support you. So there is one journalist in the United States. This is in matters of tax. Her name is Margaret Mitchell. She was an American novelist and journalist, and she said that in this world, nothing can be said to be certain except death and taxes. So when it comes to matters of tax, we cannot run away from it. And sometimes some of us, we find ourselves in trouble with Kenya Revenue Authority because our records are not in good shape, because we cannot explain maybe how we are getting revenue. Even when it comes to filing returns, it becomes a challenge. But the better part of it is that this is salvageable, or this can be changed. Because with a working system, they're in a position to record every dime that is coming in and every coin that is going out. And therefore, when it comes to even filing your income tax, you're in a position to tell, this is the much I made, this is the much I used to develop or to get or to improve my revenue stream, and this is the much I'm supposed to commit or to give back to the taxman. So, ladies and gentlemen, if you can hear me, I'll make one simple request. I want to see a high five. If you can hear me, I know there are emojis there. If you can hear me, kindly give me a high five as I share my screen. I see you, I see you. Thank you very much, Bilha. Thank you very much, CPA Morianki. So if you can see my screen, kindly give me a thumbs up. So as I've just mentioned, in a simplified way, I'm going to run you through this system, and because it's a limited session, I'll allow you to. My co-host will be sharing our contact details so that if you need a follow-up support or you need to escalate this conversation, we are able to support you. So as we do that, on my screen, you can see my accurate books. So before you log in, this is your landing page. That is after you look out for www.myaccuratebook.com. And the system is extremely simplified because the reason why we simplify this system is we appreciate that not every business person has a background in accounting, but they should not be disadvantaged by virtue of not being accountants. So if you subscribe to this system, what you're able to do is that as long as you can handle your Android phone or your laptop or a PC, you're able to manage your business using this system. Without waste of a second, allow me to log in. And the good thing as well, from the website, you can request for an individualized demonstration. We have a team of experts who can support you by conducting a 15 to 25 minutes demonstration of this system to help you understand how it works before you even think of investing in it. Right. So I'll just log in to my account. So for today, I'll just show you features. Some of you may have been part of a demonstration in the past. So today we will just be jumping from one feature to the other without doing a transaction. So this is as soon as you create an account with us or with My Accurate Books, this is your landing page where you are able to see, and we minimize that so that we are able to see everything. On the dashboard, you're able to see a summary of your sales, expenses, purchases, and an analysis of your profit and loss. Even without looking at my report, I can tell that this business has made a profit of 48,000. But it doesn't end there. When you scroll down, you are able to see a graphical impression of how the sales are doing on a daily basis. So this will help you in making decisions on, in your case, as people in the, as investors in the world of real estate, you're able to tell which day you're making more sales than the other. If you wish to see it from for a monthly period, you're able to set it. I know in some instances you have data. So on the right of this screen, you're able to see how much money is owed to your business, even without looking at the data's report. And right above that, sorry, yes, even without looking at the report, you're able to see the data's report or a summary of how much is owed to your business. And I know that we've broken it down to 30 days, 60 days aging, receivable aging breakdown. You're able to see 30 days, 60 days, 90 days, so that when it comes to follow-up, it is easy for you. I know some of you might be in the world of selling not just property but also land. Some of you might be in the industry or in management of, or in leasing properties or letting out properties. We have tens of clients in that sector who are managing receiving of rent through this system. So I can confirm that these are systems that can serve, if not all of you, most of you, especially when it comes to getting funds from your clients. On the left of your screen, you're able to see a couple of features. Under item is where you are able to record the services that you offer, because the sector that you're in is a service industry. So you're able to record every service that you offer to your client at this point. And again, you can also include a cost to that service, so that you're able to generate an invoice, even if you want to generate a quotation or even a receipt for your customer. So when it comes to services, it is not transferable. So when it comes to stock, this will not affect you because you're not dealing with maybe production of goods, or you're handling many branches that require you to transfer different goods. But even in the world of construction, and you have different projects, and maybe you do have a warehouse, you can record everything that is in the warehouse that is supposed to go to different sites within these my accurate books. Under sales, you are able to do transaction. As I've mentioned, you can do a quotation, you can generate an invoice, you can even do a delivery note, and you can even also generate a receipt or an invoice. Right below that, I know sometimes in this world, you don't receive all the payment at a go. Sometimes you request for installments. So you're able to, when a payment is in installments, you're able to receive payment as it comes in. Maybe if a payment is supposed to be made in 60 days, and at the end of 30 days, your client has a tranche of the money that you expect from them, you are able to update it at this point. Under purchases, this only applies where you have suppliers. Maybe they're supplying you with iron sheets, they're supplying you with maybe bricks or even metallic bars for trusses. Basically anything that you're getting, including the pillars that we use to fence different properties, depending on where the property is. You're able to record that within my accurate books. Sometimes this is delivered on credit, and you need to capture that it has been delivered on credit, so that when you go to your creditor's report, you're able to tell which supplier is owed how much. So this simplifies the hassle of you not knowing how much is owed to a particular supplier or how much is owed to another. And at the same time, it can be used when you have a construction site, it can be used to capture expenses, whether you're paying laborers, whether you are receiving material, anything, you're able to record it within my accurate books sometimes you are not the one operating, or apart from yourself, you have someone operating this system. You are able to follow transactions within my accurate book. So even if you're following up on a fraud issue, you're able to track it within my accurate book. You can tell who did what transaction within the system. Now, the other bit that is also critical is where you are able to record your expenses. Because again, for you to get your management report, you have to capture your revenue, and you also have to capture your expenses. So it is important that at the point of expense, you're able to add expenses. And again, the good thing is that you can categorize these expenses. I know within the system there are a couple of categories. As you can see, I've been able to update a couple of categories. However, in your case, now that you have dynamic and different needs or expenditure ways of expending money within your business, you can create that category here, and you can even generate an expense and even get a report on expense within this system. Right below that is the feature on you recording your customers. So you can have as many customers as you wish within my accurate books. There is no limit. So you can also categorize depending with the project. If you have a project in Vipingo, you can categorize that project and list the customers within the project in Vipingo. If you have one in Kilimani, you'll also do the same. If you have another one, maybe in Kisumu, Milimani, Kisumu, you can categorize customers within that region. So that has been simplified so that even when you want to get a report or when you want to do invoices for a particular region, you can do that within my accurate books. In matters of accounting, there are a couple of features that are within the system. With chart of accounts, I've shown you when you talk of expenses, you can create categories. You can also create accounts that you use for different things within the system, whether it is cash and cash equivalent, whether you want to record expenses, whether it's current or non-current liabilities, fixed asset, account payables, you're able to record that at this point. So right below that, you also have journal entries. You can capture your assets within my accurate books, and you'll be able to also see your general ledger, basically how the business is doing and how healthy is your business, and whether your accounting is your T accounting is working as it should. So is under, you're also able to get your trial balance, cash flow, as well as balance sheets. Apart from that, there are other critical reports that that is listed under reports. If you go to, and all these are downloadable in form of PDF or Excel sheet. Under reports, you're able to get inventory. Inventory, this works when if you have a site and maybe you have a store, you can record inventory for that store so that you follow movement of material from the store to the site, or rather to the construction, towards construction. Under sales, this only applies. This will apply when income is coming in. So whether you're getting money from rent, or land sold, or a property sold, you're able to capture it, or you're able to get it under your sales report. In the event that you have suppliers and they supply some things on credit, you're able to see every supplier that you owe under the creditors report. And that is the case with the debtors report. If you have a client who owes your business, you're able to see every client that owes you how much and for how long have they had that debt. Right below that, we see sales, we see user management. Under user management is where you are able to give rights to your staff. I know different staffs have different levels of access to the system. So at that point, you're able to give different staffs different rights within the system. But as an administrator, you have absolute rights. Basically, every feature that is, you have access to every feature that is in the system. You heard me mention that maybe if you had a branch in Vipingo, maybe another one in Kajiado, another one in Nairobi, and maybe some more in Gulbi, Isiolo, or Kisumu, or anywhere, and their revenue streams, or even they have independent expenses. You can add those branches and update them within my accurate books. And again, you can assign people or you can assign team members to run those branches. As the administrator or the CEO of that company, you're able to follow activities of every branch remotely because the system is web-based. So you can access information from anywhere without even calling whoever is on ground. Bottom line is, for the system to be efficient, it has to be, you have to endorse it to your team members and let them know that every activity of your operation must run through the system. That way, you are able to get accurate information, even if you need to give it to even banking institution for a facility. You're able to generate an accurate report and share it with your banking institution or your investor, and they're able to tell that your business is viable or not, because there are only two options. It's either you're making a kill or otherwise. Right. Some clients have requested that they would want to see their quotations, their invoices customized to fit their business. So we have two packages. Under the gold package, you're able to customize a receipt or an invoice or a quotation and even reports to suit your brand line. So that is a feature that came up that we worked on within this month, and it is now live. The other bit is that we have a wallet. Sometimes you want to manage your petty cash and you want to follow every shilling. You're able to do that with my accurate pay. And the good thing is that when it comes to my accurate pay, you can also integrate it with the system so that money coming in or payments going out, whether you're paying your staff or you're paying for repairs, it can go through my accurate pay. And you're able to track every shilling that is coming in and coming out of your business. If you wish to see a branch, on the top right of my screen, you can see there's a drop down. In the case of this account, I have 4 branches. I can view all of them or view a branch that I wish to see, being the administrator of an account. And sometimes you might be wondering, I have more than one outfit. Maybe I have the Shoka property managers, I have Gashoka real estate, I have Gashoka capital markets. When you have more than one business and there are different outfits and independent, you are able to link them. You are able to link all these businesses within my accurate books. So if you go to the business profile, you can create a new business with the details that are particular to that business. And if there is one existing within my accurate books, you can also be in a position to link it. So we have made it simplified so that it is able, so that you are able to manage multiple businesses from one platform. Right below that, if you look at payments, the system is made in a way that you can record the different avenues that you receive payment with and the different avenues that you pay your clients with or suppliers. You're able to do that at this point. You can update whether it's a bank account, whether you do RTGS, whether you do, in fact, there is also my accurate books. If it is M-Pesa, Pochi la Biashara, or till number or bank pay bill, you can update it within my accurate books. Having said that, as I mentioned, you can request for a demo that takes around 20 minutes. And in the event that you have an account and maybe you are stuck, we have a team that is in a position to support when you need support. So up to that point, You might be asking, how much do I invest in this system? So if you click on this profile, we currently have 2 packages. So if you click on upgrade, you'll get to see the 2 packages. So you might be asking, 500, how are you surviving with 500? So we realize that sometimes, or 800, we realize that sometimes business people may not be in a position to support a monthly payment of even up to 5,000. And we felt, how can we accommodate all MSMEs? And we said, let's give them a fair rate that is competitive to the market, and also that has value for their money. So if you went for subscription, a monthly package for the standard package is 500 bob. Quarterly monthly package for the gold is 800 bob. The difference is in what you see in bold. So you see that for the gold package, it has more advanced features, things to do with customization. You are even able to see transactions. You can manage multiple businesses. When it comes to branches, you can manage up to 8 branches, and you can even have up to 20 users within that package. And it doesn't change when you go for quarterly. The only thing that changes is the money that you invest. So monthly or quarterly, you pay or you invest 1,400. Quarterly for gold package, you invest 2,200. When it comes to semi-annual, you invest 2,800. And for the gold, you invest 4,600. Here is the catch. When you pay for annual, you only pay for 11 months, and you have a whole month for yourself without a charge. Whichever package you go for, that offer exists. So I thank you very much for following. At this point, I know my co-host is able to share avenues that can get to us. We are on TikTok as My Accurate Books. We are on Facebook as My Accurate Books. We are on X as My Accurate Books, as well as Facebook as My Accurate Books. You can get to us on WhatsApp, and our number is 0116 333 000. That is 0116 333 000. If you have a query, if you need clarification, the lines are open. Whichever platform is convenient, feel free to reach out, and we will make sure that we get back at the earliest opportunity. By earliest opportunity, I mean fastest time possible. So if there's a question, I'm happy to attend to one. Right, let me see. So I see Jessica Okalo, you need notes. We will make sure you get the notes. And in regards to notes, if you go to the YouTube page, every webinar that we conduct, we make sure that it is posted on our RWK Africa page. Yeah. Yes. So those notes, or rather the presentation that was made, you'll get it on YouTube. And I want to believe that the team will be in a position to also share it on your email. So Victor Orlando, you ask whether it has an inventory module. It does. So you're able to record your inventory within My Accurate Books. Right. Labor, touch on labor expenses for the so, okay. Right, use payment system. Wonderful. So that was Bill has questioned. I see it was responded on. So as I just mentioned, we are able to follow up with you right after this presentation. So feel free to leave your information